Kitco Mining's special coverage of the Precious Metals Summit is brought to you by Feneck Capital.
Markets in gold traded higher on the good inflation numbers. Are we at a turning point? I am with John Feneck. He is a longtime equity analyst and currently runs his own shop, Feneck Consulting. John, good to have you in person.
Thanks, Michael. Likewise.
John, it seems to be all about this Fed pivot.
Sure. I mean, it's something that people have been talking about for months. We got an inflation read that was 7.7% versus the 8% expected. I don't personally feel that's a reason to throw a party, but the market did. So we're headed in the right direction, which is positive. But I think we still have a long way to go in terms of what the Fed wants. If clients were looking at the November 2nd, Powell presser, it was all about, hey, multiple times saying hawkish things, and the market hated it, right? So to rebound that sharply on Friday indicates to me that the market is still pretty unhealthy.
How are you trading in this environment? What can you hang your hat on right now?
Yeah. You can hang your hat on the Fed will pivot, absolutely, and I think that's a moment for someone who goes short the broad market like myself, alongside going long mining stocks. I would be covering all of my shorts when I know that the Fed is done, right? But the Fed is not done. We're going to see another 50 to 75 basis points in the mid-December meeting, in my opinion, right now, based on the data that I've seen. Anyone's guess for Q1. I'm of the opinion that sometime between January and April, we'll see the actual pivot. Yeah. But I don't know what will bring that on, right? It could be something to do with the Russian war. China goes into Taiwan. We don't know, right? Those would all be valid reasons for them to stop. But what the market liked on the 4th was, hey, this is a lower read. We're going to see inflation come down. That's positive. And the non-farm number, again, was relatively hot, but unemployment, ticked up 0.2%. So the market liked that as well. So again, these are very short-term things. And to me, as an investor, not a trader, looking at January 5 when the Fed went hawkish to now, we're still in a hawkish mode.
We should timestamp this. It is Monday, November 14th. We're at the Zurich show, and I bring this up because factors are moving so fast right now. We're talking about the broader market. Let's bring it back into the gold space. How does gold look to you?
Sure. Yeah, well, gold held that 1615 kind of level nicely and didn't even touch 1570 or 1560 like somebody had expected. And we've been in that camp that you're not going to get a break of the 1550 kind of level. So now we're seeing it break into that channel that was all too familiar with months ago, right? The 1750 to 1850 an ounce level. We're there as we speak right now. So that's bullish, in my opinion, that gold has been able to get back there so quickly. Silver has been leading gold. So the gold to silver ratio as we sit here right now is 82, which is great, because if we were to shoot this, not too long ago, we were 90 plus, and 90 plus has only happened, I think, 3 or 4 times since the last 40 years, right? So when you get to that oversold condition in silver, it's time to buy silver and silver equities, and that's what we've been doing here over the last few months.
Is there any stories or any themes you think that can actually take gold higher? Because it seems up till now, it's just been held down by that strong U.S. dollar. But with the inflation number that we had, we saw that I think it was it was a very strong leg down for what the U.S. dollar is doing.
Yeah, the U.S. dollar is backed off to 106 or so. We want to see it below 100, obviously, like everyone else listening to this. But there are some factors that would cause the market to continue to be, the broad market and gold, to be negative, which would be the Fed, at the December meeting sticks to their knitting and doesn't really indicate much for Q1, right? It leaves people wondering, well, what's coming? And the market's like certainty, right? So it's like we're not getting certainty in my view. However, the market's trading like we're getting certainty, which is dangerous.
In an interview a couple of weeks ago, you said that you're really paying attention to debt. Debt mattered when you had a situation like this. Maybe explain.
Yeah. So I've been investing for 30 years, and I learned with my own money the hard way that when you get involved in 01, 02, 08, 09 kind of corrections, companies with debt will take it on the chin. Not always a bankruptcy, but down 20, down 40%. Very difficult time periods. I mentioned once on Kitco with David that I was a victim of the tech sell off in 2000. And I went to my advisor and I said, what can I do differently? And that's how I learned about gold and silver 22 years ago. Was that was his recommendation: hedge your portfolio with buying something real, tangible, right? And some of these companies don't have real earnings looking forward, in my opinion, or they're just going to have earnings that are going to not really meet expectations. So I still think next year you're going to get a lot of disappointments on the earnings front from the broad market, and that will help create some boom and interest, to your question earlier about gold and gold equities.
The other thing that you were talking about was pay attention to companies in the pre-feasibility or feasibility stage. Why?
Right. Yeah, so last December, and not to single them out, but Argonaut came out with a really bad, report, in my opinion, in terms of higher costs, right? Gold price not really doing much, but all of our inputs are going up in terms of how much we have to spend. So inflation has been hitting our sector really hard. And that then led to other companies that also announced in 2022 that they'd have much higher costs, right? We saw that with IM Gold, that was IAG, and went all the way down to 92 cents, and now it's trading, almost at a double from there.
Yeah.
So it's like the market can come back very quickly. So we use those events as A, let's call the company, find out more about this. B, if we like what we hear, let's buy it, right? Because this is a temporary dip. This isn't like the one shot to the heart that's going to put the company out of business, right? To that point, though, we're much more interested in exploration companies that are going through that 43-101 phase, the PEA phase, rather than, let's disappoint the market over here with some bad news on stuff we can't help, right? It's like, this is just the economy we're in. Things cost more.
Explain that again. So it's not so much about the feasibility of the stage, but you're just paying attention to what is actually going to be coming out of that news. Is that right?
Right. Because it's an opportunity for an investor to get more information about the company, right? A better look under the hood as to how community relations are going. How we don't like surprises, so we want to make sure that report isn't going to give us some type of major surprise we weren't expecting. If so, we're probably going to sell first and then figure it out later, right? Because as you see, the selling begets more selling in the sector this year. It just doesn't rebound as quickly as you would have hoped. So some of the names that we saw, Q1 PFSs or FSs from haven't even recovered at all. I mean, they're up maybe a little bit as of November 4th's action, but it's just disappointing to investors. And I think we just have to reset our mind that this is going to be a more challenging time, but it also creates opportunities for those that are willing to follow someone like myself or someone else as a positive, portfolio manager in the space, a really established newsletter writer that can add some value to what they're doing.
Development companies right now, you're a company right now that has actually started to build your mine or build your mill, and then you're going to be looking at escalating costs. You're going to also be looking at escalating financing costs. That could also be something that would be to pay attention to in this environment.
Absolutely. Yeah. I mean, that's one of the reasons we like companies that have existing infrastructure on the property, because they don't have to do anything, maybe a little refurbishing, but it's already there, it's valuable. If it's in the right jurisdiction, it can be used by other people, right? Our top holding, Golden Minerals, was doing this with Hecla. Hecla had a mine right by their property in Mexico. They weren't going to use the mill. So basically what they decided to do was rent it to Hecla for over 2.5 years and get X amount of millions of dollars out of that, and not finance as much, right? Not dilute shareholders as much.
The other one would also be the ability to raise money. We've seen that is going on for gold juniors. Is it still a concern right now, and are you paying attention to what the treasuries are?
We do like that the companies are getting through that phase. We favor those type of companies, right? So in the silver space, SilverX just completed a financing, beautiful looking chart. They're a producer right now, so that's a plus, I think, in a rising silver price. But also a developer like Aftermath Silver, which is not yet at the producer stage. They won't be there for quite some time. However, they just got done with a financing that's going to be upsized probably, right? And so the upsizing is an encouraging thing in that, if you did this financing in August, there would be no upsizing at all, right? It's like the market has changed. We saw October 3rd, silver up 9.1%ish. Another huge day here just recently. Silver starting to make a move, which is very healthy for the entire complex.
Bifurcation. You have the precious metal side, and then you have energy transition side, and then you have the pull through from the large automakers right now, which are going to be requiring materials. You always hear about Elon Musk talking about this. You have new investors on this side. You're also looking like the Inflation Reduction Act, which is funding a lot of nice projects. So Sierra Resources or Jervois. You're looking at them being able to kind of build these downstream production facilities, being able to kind of get that financing. Is there a difference between what is happening in the critical metal side and then what is happening in the precious metal side? Is it safer? Are you seeing that there's going to be more liquidity or more ability to investment that's flowing into those sides?
Sure. To give you two examples of companies in the junior space that we like that are transitioning, right? They're looking at what you just said, and they're saying, well, we have these other assets over here. Maybe we should start talking or developing these assets, right? Yeah. So Idaho Champion Gold is doing just that. They started the year with two 100% owned gold projects in Idaho. But then I talked to the CEO and I said, you have 660 claims here in Idaho. Tell me more about that in the cobalt space, right? Because cobalt is very interesting globally. It's less interesting to US investors. So how do you go about monetizing that piece that you own, right? And so Jonathan has been very diligent getting over to Asia where there's a lot of interest in cobalt and finding investors, if you look at their April news, that would be willing to put money on the table now, right? And then they just announced something in September with a lithium, play, right? So like they're not just a gold play anymore; they're a cobalt play and a lithium play. It diversifies my risk as a portfolio manager or anyone who's listening as an investor, right? You're not just worried about gold now. Cobalt, lithium, different things can help you as you ride and move forward.
John, I love your perspective because you spent a lot of time outside of the mining sector as an equity analyst, and then you came into it. And I think it was an experience mostly was with that you had with Sprott with it. But you have an ability of kind of looking at the resource space outside of itself, looking at it vis-a-vis other sectors. I want to talk about a bit more about what you think works in the resource sector in a sec, but maybe you could talk about looking outside the resource space. Is it a good place to be? Is it a place to be? Or are there other parts of the market that kind of look, how would you say, more interesting on a trading basis?
So I'm a value manager, and I think still when you look at the entire market, this is the cheapest sector out there, meaning mining and metals. I don't know anything else that's cheaper as we sit here right now. When you look at forward PEs on growth stocks versus value stocks, which is something that people like myself talk about all the time, growth versus value, what's in vogue more. Growth is trading at a 20 forward PE right now as we sit here as of Friday, where value is trading in general at 14.5 PE, so much cheaper, right? And so as I look at any stock, I'm looking for a lower PE, a lower PEG ratio, different things that are going to be helpful to me to get more comfort, be able to sleep better at night. I think there's a lot of, as we sit here right now, as the S&P is approaching 4,000, let's not forget that it was at 3586 on the quarterly close, September 30th. I mean, this is a big move, right? And so I'm not in the camp that we're out of the woods in the S&P, the NASDAQ, the Russell, all those indices look extremely vulnerable to me as we move forward over the next 6 to 12 months because rates continue to rise, right? Like the Fed has not done anything at these meetings, which is the all important thing, to really give me a lot of comfort that they're done, right? Like when I get that, which is what you referenced as a flip-flop, I will cover a lot of things, if not all things, and go much longer. But right now, I'm still about 10% cash. I still have about 15% in shorts, and the rest is invested in energy and mining. That's really where I have my expertise.
Lastly, what are some ideas that think that works right now?
Sure. So we mentioned a few of those. Just to give some other ideas in different parts of the market, you mentioned battery metals and such like that. So for us, lithium is an interesting area that we just started to really educate ourselves on about 2 years ago when it broke out. LIT is the way to play it through the ETF, but if you look at juniors, Lithium Bank is really interesting to me, LBNKF, because it has about 4 million acres in Canada. If you look at the Bass family in Texas, when they were selling off their land in the energy space to Exxon and others over the years. I mean, they generated billions of dollars by just selling land, right? And so we're not talking about billions of dollars on a junior that has a small market cap, but I like their share structure with 37 million shares out and a huge land package with a PEA coming by January 1st on Boardwalk. Another thing that may be of interest, I'm a big platinum and palladium person, so I look at those. You know, platinum, we mentioned to readers in our newsletter that PPLT, the ETF, was breaking out about 3 weeks ago. So we mentioned a couple of platinum names that we liked. One was Clean Air Metals, CLRMF. I talked to the CEO, Abraham Drost, probably about 10 days ago just to get verification that I wasn't missing something because the chart was so cheap, you know, at that price. And he said, this is just normal selling. So, you know, we fact check ourselves all the time, Michael, to make sure that we're not missing something before we buy heavier. And it's a simple, 2-minute phone call. It's free. Lastly, in palladium, I wrote on palladium for Sprott. I love palladium. I still think that it's starting to bottom here. Canadian Palladium is our largest palladium play right now, DCNNF, because I think that the market is just completely missing the value there that they have in the ground, and they're going to monetize that.
John, thanks for your time.
Pleasure. Thanks for having me.
My name is Michael McRae with Kitco Mining. You are watching 2022 Precious Metals Summit Zurich. Our sponsor is Inventa Capital.
Kitco Mining's special coverage of the Precious Metals Summit is brought to you by Inventa Capital.